you flip up starting from, let's say, right about this time or next month especially, you start to flip up again, and you're entering that final phase that is very much reflective of what happened in late 79 into the $50 peak at silver in 1980, or what happened in between late 2010 into April of 2011, and silver hit 50 again. Now, let's say that happens. And we are pretty convinced it's going to happen. The technicals are behaving too well, too much in line with those situations in all contexts. No matter which way we look at this thing, we come up with the same conclusion. We're in the acceleration phase, and the final dramatic part is about to happen, likely beginning next month.
Silver prices experienced a slight downturn on Tuesday, with FXStreet data showing the precious metal trading at $28.99 per troy ounce, a 0.47% decrease from Monday's $29.13. Despite this dip, silver has seen a robust 21.84% increase since the start of the year, signaling strong performance in 2023. Market analyst MichaelOliver, known for his momentum-based technical analysis, remains bullish on silver's prospects. Oliver anticipates a resurgence in silver prices, potentially leading to a dramatic phase reminiscent of the late 1979 to early 1980 period and the surge from late 2010 to April 2011. He bases this prediction on technical indicators across various contexts. Oliver's analysis suggests that the silver market has recently completed an acceleration phase from March to April, followed by a range-bound situation from May through July. This pattern, he argues, mirrors historical trends that preceded significant price increases. The silver market's behavior in March supports this view. The price rebounded significantly, approaching the resistance area of $26 before encountering selling pressure that curbed further recovery attempts. This movement aligns with the broader narrative of silver's potential for a breakout. Adding to the bullish sentiment, some market observers are eyeing a potential historical technical breakout in 2024. A cup and handle pattern, visible on the yearly chart from 1980 to 2024 highs, is raising expectations for significant price increases in the coming years. However, the short-term outlook for silver isn't solely dependent on technical analysis. Macroeconomic factors, particularly Federal Reserve policy, play a crucial role. Recent comments from New York Fed President John Williams and Fed Governor Christopher Waller suggest that the central bank is moving closer to potential rate cuts. Such a move could provide a boost to precious metals like silver. Please tune in for our exploration of MichaelOliver's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
The congestion phase back in 2010 was November, December into January of 2010. Yeah, right there. This zone here, about $25 up to about $29. That was a 3-month congestion zone. And after that was over, you went to $50 by April. Okay. You really take it off in February. So there was actually 3 monthly bars there that we showed a corrective process in silver. While price went into a zone, 15% wide zone of up-down action, momentum corrected from vastly overbought monthly momentum down to the 3-month average again. Okay. Or close to it. The 79 didn't quite get to it. 2010 did get to the 3-month average. And at that point, the next bar, the 4th monthly bar, meaning in this case, it would have been in January of 2011, yeah. Yep. You accelerated in April and reached $50 in 3 months. We think we're at that point now where, one, we've begun the acceleration process that began March, April into the May, June, now July range-bound situation here. Silver today pulled back within about 6-7 cents of its 3-month average. As far as I'm concerned, that's good enough. It's cooled off from $8 above its 3-month average down to effectively 0 on that oscillator. Very cooled off now. It was super hot. It needed to cool. And during that time, silver went into a 12.7% price range. Not even as wide as the other ones in that pause period. We strongly suspect that you're near the low of this pullback, or maybe you just saw it. Actually, the lowest low we saw in the pullback was a month or so ago. We got down to 28.50 level. Today, we got down to 28.96, I think. You flip up starting from, let's say, right about this time or next month especially. You start to flip up again, And you're entering that final phase that is very much reflective of what happened in late 79 into the $50 peak at silver in 1980, or what happened in between late 2010 into April of 2011, when silver hit 50 again. Now, let's say that happens, and we are pretty convinced it's going to happen. The technicals are behaving too well, too much in line with those situations in all contexts. No matter which way we look at this thing, we come up with the same conclusion. We're in the acceleration phase, and the final dramatic part is about to happen, likely beginning next month. Of course, we have a Fed meeting beginning the end of this month, early next month, Monday, Tuesday, Wednesday next week. Don't be shocked if they cut rates. They've already told us they're going to cut rates sooner than later.
The silver market shows signs of a strong bullish pattern on long-term charts, with many analysts eyeing a potential breakout in 2024. This outlook is further supported by the gold-to-silver ratio, historically a reliable indicator of silver's performance relative to gold. Market dynamics are aligning to drive silver prices higher potentially. Declining liquidity in financial markets and robust industrial demand for silver create a conducive environment for price appreciation. Combined with technical analysis, these factors fuel optimistic projections for the precious metal. Renowned market analyst MichaelOliver believes that the next 3 months, leading to October and the U.S. election, could see awesome movements in silver prices. Oliver cautions that if silver surpasses the $50 mark, it will enter uncharted territory, making traditional chart analysis challenging for price predictions. The current market situation differs significantly from the 2020 rally. Silver is now challenging the yearly pivot of $30, with price fluctuations around this level in May and June, suggesting that the metal may be primed for a substantial move in the coming months. Technical analysts point to a triple bottom formation at the head of an inverted head and shoulders pattern as a strong base for potential upward movement. Let's get back to the interview.
If we see we start to see firming once again from this range-bound 3-month situation, just like late 79, late 2010, early 2011. We start to see it firm up in this 12.7% range, especially next month. I don't expect $50 to even be a pause point. Not even a pause point. I know every technician out there only has one reference point left on the charts anymore. That's the old price highs at 50 and 50, and they think, oh, that's got to be a barrier. My bet is you don't even pause at it. The question is, where are you going to go on the other side? And I don't know. There are long-term measurements of the ratio of silver to gold that suggest that, if gold goes to a normal bull market peak, and by the way, gold normally has 8 full bull markets. You measure from bear low to bull high, at least they're 8-fold. Well, we're only double plus. You have an 8-fold to go to $8,000 gold. Now, what in the world could cause that? There's a lot of things out there that could cause it. Okay. They're all happening right now, even. And you're not going to incrementally go there. Now, if gold ever went to 8,000, silver went to a normal percentage relationship to gold, which, in the last 50 years, silver's been 2.5% of the price of gold, probably, 10 times, 10 different years at the 50. It's been to 2% of the price of gold, 25, 26 years out of the last 50. Well, do 2% of 8,000. Okay. You could go off the page. I don't know where the target is, but I think that the next 3 months, starting next month, in other words, between here and October, prior to the election, I think silver could do things that would be, frankly, awesome. And unfortunately, I can't put a tag on it except to say, I'm very confident that you come up out of this zone, you're not going to stop at 50. And then it's white knuckle flight because nobody then has a reference point. Yeah. The price chartists jump off cliffs. They don't know where is it going. They have no idea. Okay. Only momentum will help us at that point. But again, following what's happened twice before in the last 50 years, what I just described could easily happen again. And so far, it's happening almost month by month the way it did in those 2 occasions.
Considering the potential technical breakout patterns, the impact of macroeconomic factors, such as Federal Reserve policies, and the historical performance indicators, how do you foresee these elements influencing the long-term trajectory of silver prices? Share your perspective in the comments section. If the video resonates with you, Join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.